Okay guys, we're back again with another video, and I appreciate all the positive feedback in the previous trade breakdown, so I thought I would run it back with the trade that I took on the 3rd of November for oil sells. Getting right into it, I wanted to start off by going over the seasonality chart for crude oil. This is the 39-year seasonal chart. I can see that the month of November looks to be an open, high, low close monthly candle. Based off of the 39-year pattern, we should be expecting bearish seasonal tendencies. So before even looking at the chart, I'm already shifting my bias towards bearish. Now moving on to the actual chart, we're looking at the monthly for crude oil. And as you can see, I measured from the monthly swing low to the monthly swing high that took out buy side external range liquidity. So this is the dealing range that we're working with. And if you know the understanding of how the market delivers price, we deliver price through external range liquidity, and then after we reach external range, we draw into internal range, which would be this monthly bullish fair value gap that is in discount of the monthly dealing range. And anything that is resting above equilibrium of the monthly dealing range would be considered a low resistance liquidity draw. Now, using time frame alignment, I will be going over the monthly, now down to the daily, and then below that we'll be doing the 1 hour and then the 5 minute. So now we're on the daily chart. And after price ran our external range liquidity on a monthly chart, we had a daily shift in market structure. And after we had that daily shift in market structure, we reached a low that retraced into an optimal trade entry of that daily swing, measuring from this swing high to this swing low. And as you can see, we traded into this daily bearish inversion gap. And after we reached that inversion gap, another shift in structure closing below this swing low. And after we closed below the swing low, we retraced, but we retraced into a redelivery rebalanced gap, leaving this gap above as a breakaway. And this is left as a breakaway because this candle's wick delivers both buy side and sell side, and we trade into this range, which is considered to be balanced, so there will be no need to trade into this daily bearish for value gap. We then trade through this daily volume imbalance that is being respected by these daily candles. As you can see, the bodies are remaining inside of the gap, and we trade into this daily bearish order block, clearing these highs. So this is an internal run on buy stops, and then after we run the buy stops and tag the order block, we expect price to deliver to the sell side liquidity pool resting here. But also, as you can see, this is a market maker sell model on the daily chart that is formed in premium of the monthly dealing range. And as we said before, and as I described, this is equilibrium of the monthly range. Anything that is in premium will be considered a low resistance liquidity run sell side draw. And that is what we experienced here. And that is what I framed my trade off of: the daily bearish order block getting tagged, running the sell stops, driving us to these daily lows here. So this daily bearish order block will be the PD array that you see me reference in the next slide on the hourly. So here we are on the hourly chart for US oil, and as you can see, we run our previous daily highs. After we run the previous daily highs, these are our buy stops that tag the daily bearish order block, and as you can see, we're also inside of this volume imbalance. After we tag that order block, we have displacement lower, creating an hourly shift in structure while also creating an hourly bearish breaker block. So this bearish order block will be my POI for when price retraces into this area of price on the 5-minute chart. Because like I said, we're using time frame alignment. We're doing our monthly down to our daily to the hourly and then the 5-minute. So the 5-minute chart is what I will be using for an execution. Now incorporating quarterly theory using the 9-minute cycles, I have it divided up here. We have Q1 being accumulation from 6 to 7:30, And then 7:30 to 9, this is quarter 2 manipulation. We tag a higher time frame PD array, which is our daily bearish order block. We manipulate Q1 highs, and we're also above true session open here at 7:30. We set our long-term high here. After we set our long-term high, we displace lower, and I use this swing low to this swing high. I measure that as our manipulation leg on our 5-minute chart. And once we displace lower, we reach 2 to 2.5 standard deviations. And once you reach 2 to 2.5 standard deviations, that is when you expect price to either retrace or reverse. And on top of that, if you look to the left, this is where we have labeled for our hourly shift in structure. But once we reached that area of price from 2 to 2.5 standard deviations, I measured from this swing low to this swing high. Price retraces into premium of that M5 swing. We set a short-term high here that gets violated. We create an intermediate term high that reaches premium of the range, and my entry was exactly at premium of the range with a stop loss set at the high that was ran from quarter 2's manipulation phase. Also, the intermediate term high, the tag, and the formation was us running into that hourly bearish breaker block, like I said I would use as an area where I would look to short off of that POI. And as you can see, quarter 3, once we get to 9 o'clock, that is when we distribute lower. We retraced into premium. We set an intermediate term high, and that is where I found my entry. And as you can see, after we entered off of that intermediate term high, we let price continue. Once we reached quarter 4, which was X, a continuation or a reversal, we ran these lows here. We reversed, retagging the hourly bearish breaker block, setting another short-term high, and then the next quarter, starting for 12 to 1:30, we considered to be X, another continuation / reversal, and this was our continuation lower to our sell side liquidity pool, because in day's quarterly theory, it's either AMDX or XAMD. So I considered this AMDX, and then the next 4 quarters of the 90-minute cycle being XAMD. And here you can see this is my MetaTrader 5 with my executions from my entry POI at the hourly breaker to that sell side liquidity pool low. And this is the tweet that I made on Twitter that I posted from the daily, the 1 hour to the 5-minute daily market maker sell model with quarterly theory entry, a 1 to 3 risk to reward. But the biggest takeaway here was I used a higher time frame POI, I used time frame alignment, and after I reached my higher time frame PD array, I dropped to my hourly chart, waited for an hourly shift in structure. After I waited for my hourly shift in structure, I had an hourly POI. I went down to my 5-minute chart, and that is when I found my entry to take out the higher time frame external range liquidity pool. Now, everything that you guys see here is explained live in action with my Discord. We typically go live 4 to 5 times a week, dependent on the economic calendar and what we are determining as a high probability trading day, dependent on the draw and liquidity. So if you are interested, I will leave a link in the description on how to join in the bottom of this video. And before we close out this video and end the trade breakdown, I always like to shout out and give credits to where it's due. MMXM Trader was the one that gave me all of the knowledge and insight on an understanding of price and how it is delivered. So all the concepts that you see in this video is all stemmed from his teachings and his course, and everything based off of him will be linked in the description of the video, as well as Trader Day providing his knowledge and insight all about quarterly theory, which has been a great addition to my trading arsenal. So shout out both of these guys. They have helped me tremendously in my trading journey. But I really hope you guys enjoyed the video. I really enjoy doing these trade breakdowns, and I hope that they're valuable knowledge and insight for you guys to study and learn from, so that you can use these examples and execute them in real time in your own trade executions. But anyways, I'll catch you guys again next Wednesday for the next upload.